think I got this. I should be able to hear me. Let me get my microphone over here plugged in. I don't know if y'all can hear me or not. But what we're gonna be looking for is let me check my mic. Somebody shoot me a message and let me know if you can hear me. Either way, what I'm looking for with gold. Okay, going through everything, we can just look and see that basically this drop was from some manipulation happened last week. They're trying to keep this from going up when you're dealing with these other countries and these other powers that be. In my opinion, the United States is all for gold going up, and that is because they it's not on any kind of standard or anything, but they try to keep the dollar pegged to gold, and they want the dollar to follow gold in the market. Right, that's my understanding of it. That's one of the things that I use to stay ahead. Is whatever the dollar is doing, I can particularly look for gold to do. Let me escape this. Let me see, escape. All right, and then we could go over here and we could just look. I'm gonna find the doc. See, we can see that it's. We're gonna go to this chart. All right, and we look. This, we talk all I talk about the dollar, but the dollar is going up. Come down and reach a little zones. This all manipulation, but we look at the dollar on a higher time frame, 240. Would be like 4 hour, yeah. You can see that this thing is just bounced around, setting different highs, but it ain't going down. We can see that the dollar has been. We see where I was tracking it over here in this area when it was on that fall at the end of last year, right? I was tracking it and I was waiting for it to break that particular trend, and I can take it off. But we can see that from December last year, the dollar has been bullish. The dollar is gaining strength, right? Higher highs, higher lows. So that's a bullish trend. That's not the dollar losing power or the dollar index, right? And is this is where you measure the dollar strength, right? You got the dollar against all of these different other fiats, but this is the index that measures the strength. So basically, it's like saying the dollar is worth 105 pennies instead of 100 pennies right now, right? Saying that it's taking some of it's not beating down inflation, but it is fighting inflation, which is the problem with the economy right now. Inflated prices on everything. Not that people don't got money, but that everything just costs too much right now, and it's hard to budget around the higher cost of things. So when we go look at this in gold over the same time period, December 23, we see that the dollar is doing what? Tracking gold. They're doing the same thing. If you look at the charts, they almost look identical, except this last day or so in gold. But as far as the direction and the momentum of the market, we can see that gold and the dollar are both bullish or uh, gaining value, right? Gold is worth more dollars, but the dollar is gaining back some of its strength, right? And that's going to be the way that they're going to keep the U.S. dollar dominant. right? And they're not going to be able. These other countries only going to be able to join the bandwagon and keep dealing in dollars. Um, when we're dealing with this stuff, we gotta look at the facts. We gotta look at the stuff that count. We gotta look at these institutions. We gotta, we kind of gotta just look at what the people that have been doing this forever and making millions and billions and all of this money, what are they doing? Right? I don't want to listen to people that's or get advice from people that's uh I don't know how to put this. Um, I'm not going to look for financial information in just in certain places. Once you learn how to read these charts, you'll be able to understand what's going on wherever you want to know in the world. We can look at this and we can say, okay, U.S. dollar versus the yen, right? And we can see what from this chart that in actuality the yen is gaining strength to the dollar because people are getting out of the dollar and into the yen, right? So we see a bullish trend on the yen or the JPY, the yen. It's the Swiss, the New Zealand or the Swiss money to the Canadian money, right? And we can see that certain Canada, they're a little closer to the U.S. So what's happening? They money gaining a little value. They in business with the U.S. I'm definitely not thinking about no BRICS nations when talking about the finances of the world and the economy of the world. Because when you look at the list of these BRICS nations, they the struggling places on the earth. So of course the places that are struggling would be in opposition to the places that are economically and financially sound. Of course they would be teaming up against them, but big bank takes small bank in these games. Them teaming up together is not going to be enough to shape what has been put together. And I'm not saying that I agree with the way they put this system together, but this system is put together in a way to where that the U.S. and the U.S. dollar controls the world economy. That's just the way it is. So being that they aren't the world's leading producer or manufacturer or the place where we're finding this gold, right? They understood that, so they understood that they couldn't keep the fiat on a gold standard because if the dollar was based by whoever had the most gold had the most dollars, then the United States could not have the reserve currency because whoever had the most gold in the United States obviously is not even close to being in the list of the top of the world's gold producers. These are going to be your African nations, your South American nations, and some parts of Asia and Europe. But for the most part, if they kept the dollar uh, on the gold standard, that would automatically make these other nations that actually produce these metals dominant. They couldn't do that, so they had to change that. But they knew that they could create these other things, called like the New York Stock Exchange, the foreign exchange, all of these different systems that they have created to allow big bank basically to take little bank. That's how all of these systems work, and that's how we should understand it. If we understand it that way, we're able to stay in tune with it and stay aligned with it, right? And we just got to think about what smart money investors are doing. The way I look at things is like this when it comes down to investments in the economy. The first thing I want to know is okay, it's going to be a good investment for me if people like Bill Gates, people like uh, Robert Kiyosaki, people like, if these people are making these decisions, we can use that as information and, it can be motivation, but we kind of want to dive deeper and we want to see what even larger than them investors are doing. And a lot of the times they manipulate the market by telling people how they feel about these things. And I try to keep it away from my personal feelings and just use the data that the market gives us. When you involve feelings and emotions, you donate money. You donate money. So, but I think with gold, I think we're gonna see a little bit more of this sell off, possibly down to test these two layers of support. But I do think that this bullish pattern will continue. I don't think that gold will be going back down to the prices we saw earlier this year. I don't think we'll ever see uh, $1,500, $1,600 ounce of gold again. I think gold is going to continue up. It's just going to be a lot of manipulation that's making the market volatile. As long as we can avoid and stay away from the manipulation or find the flow of it and flow with it, we'll be all right. We're not going to be greedy because, once again, we're in one of those shaky areas where the market could go either direction. So for tonight and tomorrow, we'll be finding the rhythm and motion of the market, rather should I say, and we will be entering slowly. I suggest uh, just being that the market is in a place where we don't know whether it's going to continue down for a while until we get to these news events or this manipulation that we see news, the U.S., they keep it playing. See, this is manipulation, in my opinion. This is how they manipulate the market with these stats. And we know that those stats are a lot of the time lagging stats and don't really cover all of the information that's needed to make a good decision on which way you want to go in the market. So we're just going to be real, real careful this week, especially with all of this inflation stuff, because generally, whichever way inflation goes, the gold market will go the opposite direction. We got the Fed press conference. They're coming out the next day. Interest rate decision. This is gonna be big. This is gonna be big right here. Whether they choose to raise the interest rates uh, on borrowing money. When they talking about this interest rate, they're talking about, is the Fed going to raise the rate on which they charge the banks to borrow money? The banks borrow money from the Fed. The government borrow money from the Fed, and the Fed is the one that controls the interest rates, mortgage rates, credit card rates, the car loans. Everything is based on the Fed and how much money, how much they're willing to charge for the money that the government and these institutions will borrow to keep themselves afloat. Um, like I said, it's manipulation. We wait for it. We do a little bit of research. My FX, my FX book. You can go there, set up an account there, and they share a lot of that information. You can do your research on it, find articles, business, a couple Yahoo business, a couple places we can search to find that information to try to be up to date on it. I generally stay away from the news and watch the market. The market will tell me what's going on. Um, Not really much more. We ain't got a lot of movement out of the market since it opened tonight. So we're gonna be sitting back and we're gonna wait. We hit a bottom and look and see if this double bottom out, if it continue to come down and look for support. I really don't think so. I think we might dip down a little bit more, but coming into Tokyo and London, I mean Tokyo and Sydney, when they start fighting a little later, I think the market will push up a little bit and start to test this resistance, possibly break it, get back up on the other side of it, and slowly we work our way back up. with price, with these interest rates and all of these different governmental decisions they're gonna come out with to manipulate the market. Um, that's pretty much it. Keep an eye out. I'm gonna let the chart stay up. I'm gonna mute back out, and I'm gonna probably be switching back and forth to the lower time frames. Just try to get an eye on what's going on with the market and see if we can find a place to get in where we fit in, and see if we can squeeze us a couple dollars out before it get too late. So y'all stay tuned if you're in the signal group. Go ahead and keep your eye out for something to come now. Probably communicate from there the rest of the night, and just leave this up for visuals, please. Kind of keep up with things as I analyze it. And my chart and how I trade. The only thing I have on as far as an indicator is this EMA on the 10, and it's just pretty much like a trend line for me, or a structure, measure. Candles break over it. I consider that a break of structure. I'm gonna mute out and drop myself off the screen and just share as I go through the different time frames and show you guys how I mark up my charts to get the info, find my supply and demand or support resistance, whatever you want to refer to it as. But I do get that, and then that's how I know where to look for a price to go from one place to another before it find resistance and just get good entries and exits with a high probability. So I'm gonna take myself out of the screen and just as I collect the data, I will mark it on the charts. And if there's anything that I feel I need to share, I'll come back on. Market's starting to try to start showing a little bit of life. Want to look for a little long position. I'm kind of let it dip down. Come and look for support around this area. We've got this trap bear right here. Y'all see it? We got a trap bear candle in this rally base rally right here. And that's what I'm looking for as far as an entry. If it push up, it push up. If it push up, then I would be looking for it to come back down to this equilibrium zone. I think it's gonna have to come here just to fill the gap, so to say. But I do think price will push up and test resistance. Sooner or later, it's about that time. What? Oh, man. Glad it didn't. But I'm going to be looking at this little long position right here. I'm down here up to this resistance, possibly. And then, getting out somewhere around here. But I'm looking for a little bit of upward movement in the market. I'm looking to enter down here. And it's coming down to me. I got a buy limit. I use them tools, the automations, so I ain't got to be quick. I'm waiting for the market to come to me. If it do, it do. If it don't, it don't. I'm not gonna chase it if it start to take off in this direction, because as we can see, we got one, two different levels of resistance, and we can look over here and see we got a trap bull that create one of those equilibriums. So we can see that that's why we got this resistance in that equilibrium zone, right? And we about to double top on it or come down. But definitely want to look for a reversal in the market. We can see that price is really testing the EMA at 10. We got it to cross over it. So generally, I would be looking for price to continue up on this 15-minute chart. And, just stay alert. And I'll be popping in and out, popping in and out. I am here. So I'm here with y'all. Check it out and see what happens. That's what we want to start to look for, y'all, because we see the market came down and set a low, right? And then the market moves up, sets a higher high, right? Then the market comes and sets a higher low. Right, the market pushed up. It didn't push up much, but it did set another higher high. So now what we want to watch for is that the market comes down and finds support at a higher low than this previous low. So we know the market is going to come down. We're going to get a push, then you're going to get a sell off, or people closing their trades, taking their profit, right? What we want to do is we want to watch and make sure that the market doesn't set a lower low. The market sets a lower low, then it's possibly a continuation down, and we can bank on price trying to find its way back down to find lower support. But we just want to watch for that right now, and we can go down and kind of check the lower time frames and see how it's mapping out and see if we can see something. Um, but I kind of figured it was going to go up, meet resistance, come back down, put us back in the zone, probably get a better chance to get some better positions if anybody took any positions. And just remember 30 to 50 pip stop loss is my strategy, because I trade with small lot sizes in proportion to my account size. I don't want to get into trading with too large a lot size, regardless of how good we do. I always remember past results don't guarantee future performance. So you can always be wrong. So don't get greedy and getting into over leveraging your accounts. We always want to just look for small positions. That was a nice scalp. I got a couple positions in, took a little profit, and I'm gonna hold my best position and close the other ones. So I had one position open and I closed two. I had three in. That's generally how I trade. I'm gonna scalp. If I'm gonna take one position, I'm gonna take three small positions and scalp two of them, hold one, and wait for a better position than the two that I closed. And you'll know that by either the profit or the drawdown on the trade that you hold. So generally the trade that I hold is gonna still be in profit throughout this little dip. If it goes into a drawdown or if it goes red, then that's when I start looking to enter because those are better positions. But I want to keep my stop loss no matter what, 30 to 50 pips max. 30 being average, and most of the time 50 being the max amount that we are willing to give up on a position. It's 50 pips. You can recover from a 50 pip loss with two positions, three positions, right quick scalping. So we always want to just be good in managing our risk. I'm here, back out, and just monitor this thing. I got a couple other screens showing with different time frames. So I will be updating if I think anything's changed. But I do think we're just gonna go a little sideways and up motion, and it's gonna go sideways until it breaks this trend line. And once it breaks this trend line or this structure, then price will begin to test and possibly break past this resistance. If it blow past it, then good. But that's generally what we're gonna look for. We ain't got a lot of volume in the market right now, so just play it by eye. But now I'm here. Stick with me. We're gonna get us some money out this market tonight. Then get an entry. I'm gonna try to catch this dip. Be patient. We want to try to watch it come down anywhere around this trend line. When it come down and touch our trend line, that's gonna be our next entry. All right. So if you want to try to scalp it, that would be what scalping is. Scalping, right? We see the momentum of the market is turning into a buying situation, right? So what we want to do is we saw the resistance, right? We came down and we set structure. So now we went up, met resistance. We want to wait for price to come back down and touch our structure. If you didn't get an entry, anywhere you want to enter or scalp this as it goes up, the way to do it would be if you had entered down here, ride it up. When it saw resistance, you close your position, come down. When it meets support, enter again, ride it up till it meets that resistance, close your position, and wait for price to come back down and touch your trend line. When price come back down and touches your trend line, that's where your next entry come from, right? So you can scalp this, and even if it goes sideways, right, you still can come and you can play the market like this. But being that it's a buy momentum, we don't want to play with sales. Sales get you in trouble because the price doesn't set a lower low, then it's a higher chance that you're gonna get stuck in drawdown if you try to sell on a buying market. So when the market is buying, we buy. When the market is selling, we sell. We missed this Friday because, like I told most of y'all, I wasn't. We weren't trading Friday, but we missed a 900 pip movement in the market. You know, that's 1,000 pips. We missed 1,000 pip movement on Friday. Oh my God, we would have killed it. But you can't miss what you ain't never had in the market. Never worry about what you missed. Hopefully, we'll get it back on the way up this week. Let me let me put it in here. Invite the rest of the group. Copy. Excuse me. Put a couple more positions. I'm gonna close one of them, so now I have two positions open. I'm gonna take profit on one of the two that I took on that little dip. That's scalping, but I want y'all to get into, you know, understanding what scalping is and understanding where to enter, where to exit. That's how these lines are. Entries, exits, entries, exits, entries, exits. Be here, I'm gonna sit. I'm gonna wait for another entry or close those positions. I'm gonna use a buy limit, all right? Buy limit, which means I'm gonna put my position down here somewhere, anywhere around this line, right, to the right of the candles, and anywhere on this line, I want to put an entry price. And to find it, you just run your little pointer against it and then look to the right and it'll tell you the price. You look over here, right, it'll tell you the price. You turn these crosshairs on and say, okay, I want to do a buy limit at 22.97.94, right? And then I want my stop loss 30 to 50 pips below that. So you're looking at 94, 92, anywhere around there. You know, guys want to be uh, able to take a little bit of drawdown, a 30 to 50 pip drawdown. And even if you lose the trade or get stopped out on the trade, it don't kill your account. There ain't nothing to lose a trade or two if you're going to win 10. Most of the time when I first enter the market, you know, you got some filling out to do. So I might go in a little drawdown early, possibly even lose a trade or two early. But once I find the ebb and flow of the market and the market choose which way I want to go, I'm generally just going to ride with that. I'm not going to try to beat the market. I'm only going to take what the market give me. Now, as you can see, I'm about to put in, I got a buy limit in that never got touched because I had it kind of low. I'm going to move this up. But I'm going to keep my stop loss the same. Me generally, being that price never broke either of these structures, either this blue line, right, or this white line, I'm going to keep my stop loss the same. You know, even though price is higher, I'm just me personally, I'm going to risk a little bit more just so I don't get stopped out if we get a false breakout. That's something that I do sometimes, but that's why I use small lot sizes. Small lot size, I won't go on a lot of drawdown. I'm not worrying about it. I'm looking for the possibility, the risk to reward ratio, which is almost 4-1. We got 3.99, so it's almost 4-1 for this amount that we risking to lose. We're looking for this much, so it's a 4-1 ratio, risk to reward ratio, 3.99. So that's beautiful. Well, that's kind of high. I got my stop loss at 23.10. Okay, so it's a 3.25 to 1, which is 3-1. That's what you want to look for in trading. Anywhere around that area, 3-1. I take 2-1. I will take 2-1 in a volatile market. Remember, anywhere around this trend line is going to be our entry. Wherever you enter, 30, 50 pips, stop loss. And generally, we're going to want our stop loss nowhere lower than about 22.89, 21, even though, you know, this is really where our last support was. I ain't going to give it that much. Right now, we're about 70, 80 pips, 90 pips on stop loss, which is crazy, but that's because we're looking for price to come down. We're not looking to enter at this high price. Remember, buy low, sell high. So we're waiting for it to come lower for us to buy it so we can at least scalp it as it come back up and test on whether the market wants to set a higher high or lower low. So use the automations. That way you won't be racing to try to put your positions in. Hello, Sheila. I don't know if I can return the comment. I'm posting it to two different sites from one site. So depending on where you're commenting from, probably YouTube. I don't see it because I'm not in my dashboard. But hello to everybody that joined us. Take advantage. It's the free game. If we look anywhere around this line, and we just go right below this candle. It's a 15-minute candle. We got 3 minutes left on it. So anywhere from 20 to 96, you know, up to where it's at now is an entry, in my opinion. That way we can at the very least scalp it up for another 30 to 40 pips and get a quick in and out play. Let me do that. Sit and watch what's gonna go on. I'll be back if we get any changes. Let's test something, y'all. Let's see what the trade war chest is telling us. I don't like using indicators too often, but let's see what it's telling us. Bad man. And remember what I was telling you about. If the market is buying, not worrying about sales signals. We're only looking for the buy signal. When the market is selling, we look for the sales. And this indicator, I suggest we only use this on, if you have it, 10-minute or higher chart. 5 minute, 1 minute, 3 minute is gonna have you taking 2 minute positions, and you're gonna be at higher risk with the lower time frame. So with the research and back testing that I've done with the indicator, it works best. And it's kind of designed with my mentality, my trading mentality, and I trade off of 15-minute, 20-minute, 1 hour charts. And I might find entries and exits on lower time frames, just kind of dial it in a little bit more and try to maximize my extraction of pips from the market, as we call it. But we definitely want to keep our eye on it coming back into our buy zone. Right, this trend line is gonna mark our buy zone. I'm gonna just move this here, and we remember that this line is gonna give us our buy zone if we're looking to get in and out of the market. If we want to hold our positions, right, that we got at this lower price, then what we could do is, as it goes up, we can use this buy zone line as a stop loss. So if you got in here, then okay, this would be a stop loss. So you would close that trade with profit. You don't want it to come back and put that trade in the drawdown when you can close it right there for profit. If it come back to that price, take the same trade. And at the very least, it's going to come back up and test that prior spot or prior uh, support or resistance. It's going to come back up and test it, so you'll be able to scalp it. But as we can see, when this candle crossover, we should get a sell indicator that we're going to ignore for now anyway, because we're looking to buy. We're on an upward trend. We're not looking to sell, but you're going to get a trigger right here. That's what I want y'all to do, be able to predict what the indicators are going to tell us. Don't wait for the indicator. Get into where you can predict what the indicator is going to tell you. And that's pretty much what this center line of the indicator is designed as a support or a resistance. So if it breaks it, it broke support. If it breaks it on going upward, it broke resistance. But we're looking for it to give us a fake breakout and catch support somewhere on this trend line. It's probably going to have support there. This line will start here sideways or horizontally, and the candles will move horizontally to break this structure. Once it moves horizontally and gets over into this area where it's cleared this structure, or it's broken the structure, even though it's sideways movement of the market, it still broke the structure. And we can look at that as a high probability sign that the market is going to reverse and turn into a complete buy market instead of us just scalping this little push up to this resistance. That's the method of my madness for right now. As we get a little more info and a little bit more of the feel for the market, we'll look for more positions. But for right now, I'm going to play the play that I'm in and just look for the market to continue to bounce along this trend line. If it breaks it, then we got our zone. We know where we want to stop playing around with it. If it breaks this structure, we know we got a limit, 22.89. But I'm definitely looking to buy in any of this area all the way down to about 22.90 and 22.89, 22.88. Then I think the market is going to continue down. So let's manage our risk wisely. Be patient. You know, we got all night. Well, you got as long as you're gonna be in the market, but you got to see I got my mud, so I'm gonna be here for a while, y'all. Sundays are pretty easy. They ain't as volatile as the other nights of the week, but when it does catch momentum, it's gonna go, and we should see the momentum start to come into play. All of this stuff is telling us to say I don't trust none of this stuff. You know? Bitcoin, as we can see, struggling to get back to that high set. Because, I mean, my opinion is only worth what we're willing to pay for it. And I don't think there's too many people willing to pay $73,000, $72,000 for Bitcoin. So I just don't look for that. I'm looking to buy Bitcoin around 45 or 50,000 when it goes back down, which I think it's going to do this week. The US dollar to the Canadian dollar. U.S. CAD is showing a little bit of bullish activity, or strength. Everything you see to the Canadian dollar is green, meaning the Canadian dollar is gaining strength. People are going from the U.S. dollar to CAD or the Canadian dollar. Um, the Swiss franc is going into Canadian dollar. The US dollar is going into the JPY. Euro is going into USD, or USD is going into Euro because it's a sale on the Euro USD, meaning they're selling the dollar, or the dollar for Euro. Gold, as we see, we got it showing green on the XAU USD, but we're on the CFDs. I'm getting some action over here, but I'm looking to enter. I think it hit one of my buy limits. Yeah, it hit my buy limit, so I'm in two positions right here. If it break it, I'm gonna take one more, but I'm gonna be patient. I want to get the best possible position, but we're looking for it to bounce off of this line. If it don't, we know where we can get in the market at. So patience right here. Get your best positions. I think I'm gonna be looking for my best position. I got two in, and my one trade that I originally got into is still in profit. I got in at 22.95, so right around here. I'm gonna wait. If that trade goes in the drawdown, that's when I look for my next entry on a buy. I'm gonna give myself all the stop loss I feel like I need. If it go down and it stop me out, I'm gonna reposition and start looking to sell the market because it'll be a continuation of the downtrend. What we're looking for, reversal. See, we got support here, and just real simple. It's only hard as we make it. Look like the trend is fighting to hold up. You got in on the trend line, you're in profit. I'm in profit already. You can scalp this trade, and with maybe 10 pips, but I'm gonna hold it. The dip below it, I'm looking to buy basically all the way down to wherever the bottom of this indicator is. That's the last line of support. So if we come down and this line want to turn and point down, then we're gonna start looking to sell the market. But I'm confident in my analysis, and you gotta always be willing to live with whatever you see. I think we're in good shape. If you ain't entered, look to enter if price break through here. Last line of support would be our ideal entry if it come down to here. Stop loss around 22.89 if it do come down to that point. And we just look to either ride it back up to resistance, or resistance. Those three different places you can look to get out of the position. But we got a little scalp right there. If I get another 10 pips out of the scalp, I'm gonna close it and take the 20 pips profit because I don't want to get nothing back to the market. It's about time the normal volatility come into this market. So we should start to see some movement more than these 20 and 30 pip movements. The market will decide soon, and we should get at least 80 to 100 pips, whichever direction the market chooses to go. Uh, we would like for it to choose to go up, but I think it's about to get crunk. It's over here telling us it's a sell market, showing us the range. It ain't really been open long, but it will give you some info. If y'all got any questions, shoot it to me in Telegram, and I'll answer them from there. We're just gonna watch. I'm gonna sit here. I'm gonna try to wait and see if I'm gonna get me another position or two. But I'm definitely buying the market. As we can see, y'all, we always look for the market to repeat itself. All right, hopefully we saw our entry zone, you know, came down to 95, went up to 97.56. That's 25 pips. That was a nice scalp. You just have to stay focused and wait for those quick little entries. Remember, when it came down and touched our line and the this area was our entry for quick, you know, 20 to 50 pips, possibly 60 pips. I was actually able to get a better position than my first position that I was holding. So now I got two positions that I'm looking to hold as we go up this trend line. It's that simple, y'all. Get in and out of the market. Simplest tools. Keep everything simple. Trend lines, equilibrium. Then the trade war chest will help. It'll actually let you know when your position is good and you should lock in your break evens. All right, so everybody that got in should have their entry as a break even. We don't get nothing back. Once we get in, we take our profit, we don't get it back. So you should have your trade set at break even. If the market want to continue down a little bit, we just look to get a better position. That's it. Because like I said, I think the market wants to reverse and go back up. We have manipulation Fridays to push the market down. I think the market want to get back to going trying to set higher highs with gold, like I think it's going to do for the remainder of this year, going into next year. But we're probably really going to see gold get crazy toward the end of the year. But these movie stop losses are up from wherever they were to a break even, and look to scalp bad positions, look to hold good positions. Move your stop loss up as price goes up. Like price goes up and breaks past this resistance here, we want to move our stop loss up and keep it 30 pips behind price as it goes up. That way on the dips, we can get out, scalp, get back in. I'm in profit on all positions. Got four, two good positions, two okay positions. So one of the two positions, I'm gonna take my profit because I don't want to. If it dip down, I can get a better position. All profit is good profit. Probably stick around till midnight, get whatever we can get out of this, and I'll be moving my stop loss up as it goes up. And then whatever happened from there. But around midnight, we're going to get out of here. And I will see you guys bright and early to get the New York week started, which is going to be crazy. Probably going to see a lot of bullish movement in the New York market, the Tokyo market, which was about 2 to 4. We're going to see a sell-off or whatever happens until 2. So if the market pushes up until 2, look for it to sell back off going into London, London, Tokyo crossover. They generally sell the market. When Tokyo get out of the market, London will prepare for New York and start pushing the market back up. So let's just watch. Might get a kind of sideways market for the night. I don't know. But I don't think price is gonna push much lower. It's got a good 25, 30 pips right there. So take profit as it go up. Move your stop loss as it go up. And, We'll take what we got so far for the night. Profit, good profit. Some nights you get a lot, some nights you get a little bit. Take what we get. We're forced nothing out of the market. So I'll stick around. I'll come back and keep updating, but probably around midnight, we're going to call it a night. See how the market then came down to our buy zone and it's kind of going sideways. So, kind of slow, not a lot of volume. Um, you know, so people want to play around with it, keep stop loss kind of tight. Make sure we're in that zone. Uh, about another 10 minutes, get out of here. Um, Have a good night. That was a couple good plays there, a couple good scalps. Off of this play, but market really ain't no volume. Got a bunch of sideways action. So Tokyo coming in with some volatility, hopefully. If not, we'll get in the morning. That's gonna be it. I'm gonna go ahead and shut down. See y'all next time on Wednesday. Next Sunday, 8 o'clock, we'll be back doing the same thing. And we are out.